there, this is James and you're watching Tixee Live. In today's program, we've got a fair bit to cover once again because the market, as the market does, has changed its mood slightly, so we're going to have a quick look on that mood. But before we begin that, don't forget, these little videos are for educational purposes only and in no way whatsoever should ever be taken as advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out the way, let's get started. So, what is the main headline so far today? Well, it seems like the group of hawks is growing because Christine Lagarde, who is the chairwoman of the ECB, European Central Bank, has actually recently come out to say, I think she's at Davos in Switzerland for the World Forum, Economic Forum. She's actually said that the ECB is likely to exit negative rates by the end of September. So basically, what she's saying is she's likely to increase interest rates. The ECB is likely to increase interest rates from probably July and September. Now, don't forget, the ECB's interest rate has been minus 0.05 for quite a while. And don't forget, beforehand, they did say that even though inflation, which is pretty high, it's actually at 7.4% in Europe, not as high as the United States at 8.3 or anywhere close to the UK at 9%, but still pretty high. They have said they were reluctant to raise interest rates for obvious reasons, because they want to encourage growth and things of this nature. But the fact that she's come out now and said that, yeah, we're likely to exit the negative interest rates by September is sort of an indication that now they're open to the idea. They're open to the idea. So what has been the knock-on impact of this statement? Well, basically, we've had quite a bullish euro today. And some analysts, not myself, but some analysts are basically saying that the 110 euro dollar could actually be in sight. So let's have a quick look at exactly where or how the euro is doing off the back of Lagarde's statement. Let's have a little look-see. So as we can see, euro is currently trading at 1.06492. So we have had a bullish move on the euro today. However, it's still capped as it stands around 1.06616. I think the real test for it, if we do break through this 1.06616, which is holding it at the moment, and it's actually by the 200 moving average as well, if you look at it, I think the real test is going to be 1.07017. That, I think, is going to be a key area of interest if we can break through that level of 1.06616. So there we are. We're capped at the moment there, but we have got bullish momentum in the euro. 1.110, I think we got quite a few hurdles to get to before we come to that. Now, the question is, why is the market seeing it slightly bullish with the euro, as opposed to obviously when we did interest rates for the US, the UK, it did the opposite? Well, the UK interest rate is at 1%. Okay, the US interest rate is at 1%. Like I said, the ECB or Europe's interest rate minus 0.05. So even if they raise it just to a slight positive away from negative, it still will be quite cheap to borrow, as opposed to the UK, as opposed to the US. So that's probably why it's reacting slightly more bullish on that announcement and that statement there. So anyway, what else is happening? Well, again, like I mentioned at the beginning of the program, the market has gone through a different sort of changes today. It is slightly more bullish, so to speak. And I'm asking the question whether or not we're seeing the return of the dip buyers. Because don't forget, obviously, the markets was under a lot of pressure last week. So maybe are we seeing people buying at the dips to give it a slight relief? Or are we seeing a change in tone and a change in mood? Okay, or the bulls coming back in at the moment? Or, and this is the question, this is what I want us to talk about. Or is it just dip buying off the lows at the moment? the market-wise, Europe-wise, what we've seen the FTSE currently 1.10% up, DAX 0.80% up, and Eurostock 50 0.22% up. So again, not over the top dramatically, like, big bull run. Like I said, we did see that massive sell-off last week. I'm not convinced. I am not convinced that we have seen the bottom. And the reason why I say that is I sort of think, obviously China did that move last week, which gave it a bit of a boost. But I also think maybe the market is hoping that Powell won't be that aggressive with his interest rate hikes. That maybe he would just do 0.5 and give the market a bit of a hug, so to speak. So I'm not quite sure whether or not the market is simply having its 3 bowls of porridge and is not aware that the 3 bears are on its way home. So I'm not convinced that we're not, we may be. I'm not saying that we definitely have got optimism back today, but I'm not convinced that we have seen the bottom. And talking on that, there's another couple of things to discuss. Basically, the S&P 500. It's being asked, have we seen the bottom on the S&P 500? And bear in mind, the S&P is down 18% so far this year. 18%. Not as bad as the Nasdaq, which is down 27%, but still, it's still down 18%. So there was an interesting thing. Bloomberg did a survey on bank members, analysts, and things of this nature, asking what levels they could see or what level they thought the S&P 500 can reach to this year. And 28%, which is the largest group of that survey, the largest percentage, said 3,600 points. We're trading now, we're trading at the moment 3.8, no 3.9 at the moment. And 28% of this survey believed or said they thought, again, it's just their opinion, they thought the S&P could go all the way down to 3,000, 6,000 points, 3,600 points this month. Not this month, this year. That's what they're anticipating. So I'm not convinced. But let's have a quick look at some other instruments and other assets, etc. So I want to start off with, there you go. See, the euro again is trying to challenge that level now. Look, 1.6616. It's been holding on that level though, and again that's near the 200 moving average as well. So that's interesting. Let's have a quick look at the S&P as we're talking about it. Oops-a-daisy, wrong. S&P 500. As you can see, it is off the lows. This is on a 4-hour chart. We're trading around 3,939 points. So we're off the lows. Clearly, this is the level of interest here. Look, we've had some selling action to cap it from there. And it is under the 100-day moving average as well. So we're still indicating a downturn. So I'm not convinced that we're possibly seeing the bottom. But again, that's not trading advice. That's just my view, my opinion at the moment, which, like anything, could change as soon as the market changes. Let's have a quick look at some other instruments. Remember gold? We were talking about gold the other day. It's trading above that key level of 1,834. But it is still holding or hovering above it. Currently, we're just around about 1,842. So it has got a bit of a bullish momentum. It is above the 200 and 100 moving average. I see the next key level, $1,865.57. So that's the key. If we get a clean break away from this area, that will be the level I'd be keeping my eye on very closely. It's an area of interest, $1,865.57. So a quick look at the cable. Okay. Remember that key level we were talking about? 1.2549. That was the level it was at before the Bank of England increased interest rates. Well, we're trading just above it now. Okay. We're trading just above it. We're trading at 1.25644. So we're trading just above that level as we currently stand. Still above the 100 and 200 moving average. So slightly more better spirit, but I believe there's something happening, I'm sure I'll talk to you about in a minute tonight, which could have a really big impact on the cable. That's the British pound, US dollar. One other thing, again, this is something of interest, which I want to look at. The dollar Swiss. Remember, we looked at the dollar Swiss last week. when there was a rush to safe havens. Okay, and again, this is why I'm not quite sure if we've seen the end of the route yet, because it was being held at 0.97158. It's since broken down past that level. So there is still a desire for safe haven status of the Swiss franc. So people are still buying it as a safe haven. Or alternatively, it could be just a weak dollar, because we do have a weak dollar across the board. So I'm not saying that the safe haven rush is over, but I'm also saying because it had just be a weak dollar. But I'm saying the fact of the matter is we've broken that level now of 0.97158, and we are trading just a teeny weeny bit below the 200 moving average. So that's interesting and worth watching, certainly. Okie doke. Things coming up this week, which I'm very excited about. First of all, of course, is Costco. Their third quarterly earnings are coming out Thursday after the market is closed. Expectation is they're going to say a profit of $1.69 per share on a revenue of 31.84 billion. Now, be interesting to see, because we know what happened last week with Target and Walmart. When they broke down below, showed they had actually their earnings was more than half. For one, their stocks and their share price dropped, but the market's mood completely changed to panic again as well. So Costco on Thursday would be very interesting to watch indeed. And finally, what else this week? Well, we have Bank of England's Governor Bailey speaking tonight. That his mood, if he's hawkish, if he's overly hawkish, that could change the temperament of the British pound against the dollar and also the euro British pound and the guppy, British pound, Japanese yen. So I'm going to be watching out for that, what he says in that tonight. Other events, EU PMI, US durable goods, ECB Lagarde, again, Christine Lagarde speaking again on Wednesday. So I'd like to see if her tone is even more hawkish than the statement she made today at Davos. And the big one, FOMC minutes and US GDP, which I most likely will probably do a watch along for that event. So plenty to look forward to. So another exciting week ahead, and I hope you're able to join me. Now, remember, you can ask me questions when I'm here, whenever you want. And if I know the answer, I'll try and answer it for you. If not, I'll find it. So please feel free to ask me questions whenever you want to. And remember, like I say, this is here for you to give you information and to help you, understand what is moving and shaking the market, so to speak. So let's have a quick look if there's any questions. No, there is no question. So please don't be shy. So next time, please ask questions. I will be online again tomorrow, doing probably 11 a.m. session and a p.m. session, because I want to do at least 2 a day. And the watch along on Thursday for the US GDP and the FOMC minutes as well. I might see if I can do a short little video on that, because that's going to be a big impact. On that note, if you're watching me on Facebook and you like it, give us a follow. If you're watching me on YouTube and you like it, subscribe, hit that notification button. And if you've enjoyed it and found it useful, give me one of those. It will certainly make me smile today. On that note, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.